next guest will undoubtedly have some thoughts on both the ECB and the God particle. Joining us now from London is Gemma Godfrey, Brooks Macdonald Asset Management, head of investment strategy. I can't, it's the lead, but we're a business channel, so I can't really start with that, Gemma. I want to start asking you about...
I can link it for you. I can link it for you.
Good. Really?
Yeah.
We've had some
Gemma Godfrey,
we've had some pretty strained linkages so far this morning.
Theory.
I mean, quantum physics has achieved what Europe has failed to do, and that is a great leap forward in terms of unification. Because obviously the Higgs Boson discovery is a step forward to try and unite everything in the world, all the forces and all the particles in the world. And while Europe is, you know, it's struggling to try and move towards fiscal consolidation. So there you go. I mean, that's one way you can
trying to reign in Greece at this point. Never mind the entire universe.
Now that you have, you know, I was going to ask you about this Spanish auction. I'm going to in a second. But how much, as a physicist, do you have an idea how much dark matter we're talking about?
Dark matter?
No, you don't know. Okay, it's been a while.
No,
it's been a while. It's like asking me about molecular biology.
Dare I say? Can I say one thing?
Yeah.
And she's blonde.
Oh, I know. I know. She's got a lot. She is truly a riddle wrapped in a enigma, wrapped in a conundrum.
An enigma wrapped in a.
Yeah. So this 10-year benchmark bond at this Spanish auction, it was up to what is a pretty hideous level, 6.4, but not up that much from the last time. And some of the shorter maturities were not up that much. And it looks like there was a lot of demand, not quite as much as the last auction, but was this a success that we saw in Spain? And the shorter term stuff actually went down a couple of the yields. So was this good?
I mean, what you're seeing is initial elation from the, you know, the outcomes of the EU summit, and then a realization that actually this elation is misguided, because the measures that we saw coming out of the summit are temporary or they're limited. So in one respect, you look at, they made investors move further up the pecking order and be more senior to the bailout funds in terms of repayment. But again, deposits aren't guaranteed. So the risk is still there. So investors are suddenly realizing, you know, we're further up the pecking order, but the risk of loss is still there. So that's a bit of a caution. And secondly, they've tried to remove the government out of the equation to do with recapitalizing the banks. So now they can recapitalize banks, bail out banks directly. But is this, you know, wishful thinking? Because at the end of the day, if Spanish banks start to struggle, investors are going to become more cautious about Spanish government bonds. So again,
what you're saying, Gemma, what you're saying, Gemma, is that they're starting to see the dark matter in all of this, in this entire bailout.
Oh, better than that.
And speaking of dark matter,
not just the dark matter. They're seeing the black holes.
The black hole,
which is Europe.
Now, speaking of black holes, exactly where I want to go with this. Why won't the banks take the money from the ESM and the EFSF and just plow it right back into sovereign debt?
I mean, they did try to do that. We've seen €1 trillion from, you know, the long-term refinancing operation go into the banks, and that's exactly what Spanish banks did. I mean, for, you know, between the first and the second tranches of LTRO, Spanish banks' holdings of Spanish government debt rose by 29%. So we did see that. And what happens is you get this very short-term, you know, kind of come down of Spanish government bond yields.
So let's just
then all the risks resurface.
So let's play this through, right? Talking about the ability for like an electron to be in two places at the same time, right? Which is that you're going to have this money. It's going to go plowed back into the banking debt, right? And there's no guarantee, there's no way to keep it as equity in the banks, right? And the banks just go and buy more sovereign debt, which reduces the pressure on the sovereigns to reduce their deficit.
It reduces the pressure on the sovereigns, but you're doubling up on your risk. The risk is still there. And what you're assuming is, as they did assume, you're assuming that investors will therefore differentiate between government debt and bank debt without realizing that actually investors are smarter than that, and they can see the linkage. And if there are going to be problems with the banks, there's going to be problems with the country and therefore government debt.
So what's going on with the ECB? Let's get to that. What's going to happen?
Yeah, I mean, it's incredibly, basically, people are expecting that the ECB are going to cut rates today, but that could be cosmetic and not medicinal. And the reason is, I mean, they're looking to reduce rates below a 1% level for the first time, not just cut interest rates, but deposit rates. But although this could boost confidence because it'll assure the market that, you know, measures are being made, Draghi himself came out and said last month that price signals provide relatively limited immediate effect in regards to turmoil. So what you could see is that not only will it not boost demand, but actually, if you're potentially threatening the profitability of banks, because obviously they'll be earning less for deposits, it actually might lead them to rein in lending further and do the opposite of what they're hoping.
Mm. And explain to us, and Michelle in particular, do you look at what bankers did with LIBOR and just, I mean, are you filled with revulsion and rage? We can't put our finger on why.
I'm having trouble getting angry here.
Yeah,
and normally I don't.
I mean,
you're British and you know what you're talking about. So tell us, why are you so angry about everything?
The big concern about the banking. Well, keep it all. The big concern about the banking industry investigations are the real victim could actually be the man on the street. There could be damage to confidence, damage to credit, and also further job cuts.
But what if their justification was they were trying to maintain confidence? Do you believe this conversation supposedly that happened between somebody at Barclays and the UK regulator saying, why is your LIBOR rate so high? If people get nervous and then there's going to be a bailout, so they wanted it lower.
Maintaining confidence or making profits? No, I'm wondering where the emphasis
but I'm talking about the UK government wanting there to be a maintenance of confidence in their banks so that they don't have to do a bailout.
Well, they've shown that was a very short-sighted strategy, if that was the case. I mean, the concern is that this could actually affect the banking industry as a whole. I mean, you know,
how are they making profits? How are they making profits from keeping them low? Don't you work for a bank? Aren't there people around listening to what you're saying about these awful banks right now?
No. You can't tar banks with the same brush. I mean, the banking industry, it's the largest private sector employer. There's over 1 million people employed. There are the minority that have been bad and are obviously being called to justice. But the industry as a whole, there are a lot of innocent people there. And I think that the focus it's been on Barclays, but with 18 financial institutions, and 12 of them have already fired or suspended people. This is an industry-wide phenomenon. And you've heard, I mean, Credit Suisse have already come out. I mean, just to answer your question, they actually moved the rates down as well as up, depending on the environment, whether it was to boost confidence or actually, as I said, kind of boost returns.
Post-crisis and post-crisis, yeah.
How much dark matter is there, Gemma?
No. When did Bernanke? What about? Have you noticed
how much dark matter there is?
Have you noticed central bankers manipulating rates from? I mean, someone's going to put rates where they want them. I don't know. It seems like we're splitting hairs again here. There's a huge difference between central bankers and private bankers putting rates where they should be for mankind.
I mean, the point is, it's always very short-sighted. As we saw, with central bank action, ultimately, you may get a short-term boost in the direction that you want, but over the longer term, investors look at a longer-term time horizon.
But that's not his question. He's speaking to the underlying morality.
We've got dislocations from what? Okay. No, but look at what central bankers do. That's short-term too. And sooner or later, all of this could come home to roost as well, as these bubbles are forming all in different asset classes because you're not letting market forces determine where rates are anywhere at this point in the world, are you?
At this point, they're damned if they do and they're damned if they don't. Because if they don't do anything, the markets are going to be incredibly volatile, saying you're not doing anything, we need action. And if they do something, as you said, it's, well, you're manipulating, is that even going to solve the problem? So there is this quandary going on.
All right. She doesn't know how much dark matter.
You didn't ask her. How do you know she doesn't know?
There's a lot of dark matter, but you don't know how much. Do you, Gemma?
I'm not going to quantify it, no.
Well, we've got a lot of different answers from people, ranging from 24% of the universe to 90%.
No. At least 90.
Well, we got all different. Squawkopedia is not really coming in with the answer here.
A lot of dark matter. I have no idea what it is. But
a lot of dark matter on the set this morning.
Gemma, thank you.